Hey, it's Dan. Welcome back. You're watching I Allegedly. And we've got a good one for you today because I've got Jack Hanney, CEO of Patriot Gold. You guys have asked for him. You guys wanted to know what he thought about the economy, metals, everything. So we're going to cover all this today. And thank you so much, sir, for being here.
Thank you for having me.
Okay, so do not forget to like the video, share the video, comment, and let's get right into it. But, there has been so much talk. And, I'm really proud of one thing that I want to thank you for is that I've been a spokesman of yours for 2 years now and a national spokesman for about 18 months. And I love Patriot Gold, but man, oh man, one thing I talked about last week on one of your commercials I did was if people followed us, Jack, from 2 years ago.
When we started shooting videos, gold was at 1,600. Silver was in the high teens. Gold is now at 2,500. Silver is approaching $30 an ounce. Gold is the best performing asset class of 2024. It's up 23% in 2024. The NASDAQ, driven by AI, the artificially inflated AI NASDAQ is only up 18%. And gold is up 23% in 2024.
Absolutely. So one thing that, we've talked about is there's so much going on in the economy. We've got the election coming up. We've got just instability globally that we have to talk about.
We have rate cuts on the way.
You have rate cuts too. And
on the 18th.
And everybody thinks, oh my gosh, this is going to be real estate prices are going to double again. I think that it shows the state of the economy because certain things are not good right now.
Well, how about that jobs revision? They revised the jobs report down 881,000, the second largest revision in history. And there's countless reports that when the Fed starts cutting rates, we're in a scary moment.
Yes.
Because they're only cutting rates because we're teetering on the edge of a global recession. China's heading towards a depression.
Absolutely.
A depression. Absolutely. And really, we're not teetering on the edge. We are in a recession right now.
Absolutely. You see all the layoffs. Chairman Powell brought up a great point talking about, inflation's, we've got that under control. It's still at 2.9% if you believe those numbers.
Yeah. The thing is, and the scariest moment is this, when inflation is still, let's be honest, at record highs. Inflation, food prices,
right,
gas prices, still at record highs, and the Fed start cutting rates. We are truly then in a perilous moment.
Absolutely.
A perilous moment because, they may try to say that inflation's at 2.9%, but who are they kidding? I mean, you go to the grocery store, sandwiches are now $15.
Oh yeah, absolutely.
$15 for a sandwich.
I covered all this, all these different places out there that are just completely expensive. Shake Shack. I went. People said, "Oh, you got to go there," and it was $24 for a combo meal when I had
$24.
Yeah.
Or fast food now, McDonald's, every one of them. We went to a baseball game, 4 hot dogs, 2 bottles of water, $66. And we could shoot an entire episode on this, but they spun the iPad around and it started at a 22% tip.
Right.
I wrote in the custom tip for $2, but I mean, for 4 mediocre hot dogs and 2 bottles of water, $68.
Yeah.
Are you kidding me?
I want to take you to a game, but the Angels keep losing, so I know you don't want to see that. So, absolutely.
There was a report, by the way, the other day about families going into massive credit card debt, taking their kids to Disneyland.
That and back to school too. It's crazy.
Yep.
So Disneyland, the payment to go to Disneyland, when you have a day that's $200 a ticket, when you add it all up, and parking and everything else, it is outrageous, guys. That's before you eat anything too. So it's just crazy. The amount of money that is spent out there right now is crazy, and people can't afford it.
Our credit card debt right now has surpassed $1.2 trillion.
Yes.
It's the highest credit card debt in history, at a time when interest rates are at a 40-year high. So you have the carryover debt because Americans can't pay the balance in full. But you know what that's not factoring in? I'm sure all of us have seen over the past 4 to 6 years, Affirm, buy now, pay later.
Oh, absolutely.
I've
covered all that. It's crazy because people go out and and you know what, I don't have to make a payment. But here's the thing, almost 70% of the people miss the first payment, so they get hit with the interest charge.
Well, that's what's juiced up the consumer spending the last 18 months since post-COVID. It's all this buy now, pay later, all this 0% Affirm. Now wait until they don't start making those payments. And they don't factor that into the credit card debt. That's the crazy, they come up with all these ways to somehow not factor it into the credit card debt, just like they do with the employment numbers. I mean, how do you revise the jobs number down nearly 1 million?
But those are not, it's not like we lost 1 million jobs. Those jobs just never existed.
Never.
That's what people have got to understand, is that the Commerce Department should be ashamed of itself. And the fact that,
well, those were Biden's talking points for about 6 months about how strong the jobs market is, how strong the economy is. Meanwhile, then they go and they, after they remove Biden, they revise the jobs number down. And now that we're, basically looking towards rate cuts starting on September 18th. It's 100% priced in the market, by the way.
But everybody thinks that's going to be the thing, Jack, that's going to make everything shoot up. Real estate agents write me and say, once that happens, you're going to see 4% mortgages. I'm like, I don't know what you're talking about, but you're going to see everything just shoot up. And I think it's a sign that things are bad. I really do.
Are banks really going to try to stop making money on the higher rates? Do we really think that's going to be applicable to mortgage rates? And the one thing is this, what people need to know, what your viewers need to know, is in 2007, in September of 2007, so does that seem eerily similar? After the first rate cut, okay, the stock market crashed 51%. Now, gold went up 235%, and silver, by the way, went up over 300%. But the stock market crashed 51% after the first rate cut in September of 2007.
So, do you think we could have multiple rate cuts this year still?
I do believe that they'll cut rates in September. It's all based on what the August job numbers are going to be reported next week.
Which will be lied about.
Whether it's going to be a quarter basis point, a half a basis point, some are saying 3/4 of a basis point. But I do believe they're eventually going to cut rates 5 or 6 times, 1.75% basis points to a 3.25%, which they're saying is the neutral rate. But I referenced 2007. Well, let's look back, before 2007. Well, in December of 2000, after the first rate cut, so that was the dot-com bubble. So we had the dot-com bubble in 2000, the subprime in 2007, 2008. In 2000, December of 2000, after the first rate cut, the stock market pulled back 44%. It crashed 44%. I mean, that's a big,
wow,
44% and 51%. That's a huge crash. Gold went up 56%, and silver went up 65%. So that was in 2000. But, if you're a retiree, or if you're in your mid to late 60s, you have a 401k, and all of a sudden we're ahead of rate cuts, and you look at 2000, 2007, and what happened after the first, because, economists, or not so much economists, but talking heads like to celebrate rate cuts like it's a good thing. You have to understand, they're cutting rates because we're in a recession.
Absolutely.
That's why they're cutting rates. It's not a positive sign.
This is, history repeats itself. I also did a video a few weeks back about the last time we've had emergency rate cuts. And it always followed things like 2000, you had 2001, and then, 2007, and then the economy started tanking even more, and they had an emergency rate cut again, which again was bad for everything. So Jack is the CEO of Patriot Gold, and one thing I do want to mention is that they have been my #1 sponsor on the channel. And for all your gold and silver and precious metals needs, call Patriot Gold today, 888-330-1431. And they have the no fee for life IRA, 401ks. But to get yourself into precious metals, guys, think about what Bob said. And that's what got us talking about when Bob Kudla got on the phone, where he said, you know, you may see things drop 10, 15%, but the thing you love.
But Bob Kudlow said, you know, silver could just absolutely skyrocket. That there's no telling where gold and silver can go, and he's right.
Yeah.
Bob Kudlow, he knows what he is talking about, and he said there is no top for gold and silver. And in fact, I mean, so much so that J.P. Morgan came out with a $36 an ounce forecast for silver in 2025. And there was a report last week, Samsung has now introduced this new battery.
Right, which is so reliant on silver.
It's all silver. It's all silver. And we're currently running into a 217 million ounce supply deficit on silver currently. So as they're making this aggressive push towards EVs and solar and renewable green technology, the amount of silver that's going to be required, long-term silver right now, many say will outperform gold.
Absolutely. But again, it's an inexpensive, people that don't have a lot of money, and when you look at gold at $2,500 an ounce, and think of how much silver you could buy for that same price, at 30. So guys, look at this and look at silver, but look at what the experts are saying. And one thing that I got a kick out of the other day, and I sent this to you, was who's bought the most amount of silver in the second quarter of the year. So that's the, up until July 1st. And that was the country of Poland. Bought 17 tons of silver during that time for their central bank.
Before Poland, it was China.
Yeah.
Because China is doing a strong solar push. But the thing too, well, one thing I do want to talk about in this half hour that we have is, how about Kamala's plans about quadrupling the tax on stock buybacks, which has been really what has been fueling the stock market rally over the past 12 years. Stock buybacks are what has been fueling this entire stock market rally, and she wants to quadruple the tax. Not double, but quadruple the tax.
Let's use a company you've heard of, Apple. Apple has a lot of cash on hand. So what do they want to do? They want to go to the marketplace and actually buy their shares back for the company, and now they want to tax that to oblivion. It's just
not only quadrupling the tax, but then she also has another proposal right now, which is capital gains taxes on unrealized gains. So if Dan had bought, let's say, 100 shares of Apple back in 1984, right? So Dan's 100 shares of Apple are now worth $10 million. Now you're not selling them. You're not selling them now. You'd like to, peel them off incrementally later on in life. Well, Dan, unfortunately, it was $9.5 million in gains, and you're going to have to pay the tax on that. How can you possibly? I mean, Elon Musk came out and said,
it's insane.
Yeah.
But also, I have a friend of mine who makes videos who said, that's only for people that make $100 million. And I'm saying, that's not true. She wants to do it for everybody, because her one of her spokesmen was on CNBC of all places and just got slammed because she said, how is this even constitutional to sit there and say you've made money on something that you haven't sold yet?
But people, and please, people that say that this only is applicable to people over 100 million, don't understand economics. Because if it's applicable to someone who's worth over 100 million and they start dumping their shares, we all saw what happened at the NASDAQ 2 weeks ago when it was reported that Warren Buffett had dumped his Apple shares, right?
Yes.
So what happens is when people that are worth over 100 million that own all these shares of Nvidia and Amazon and Meta start dumping their shares, the panic selling, and what happens then is that's when you see the market collapse, absolutely collapse. And it's these policies that she's introducing that's why Donald Trump warned North Carolina in his rally that a Kamala presidency would lead to a 1929 style crash. But Mike McGlone of Bloomberg just said 2 weeks ago that we are headed for a crash worse than 2008, the subprime mortgage crash. But he forecasted gold to go to $3,000 an ounce in the same article.
Yeah, everybody gets upset because I interrupt everybody.
Sorry.
But no. But the whole thing is that I just go so excited talking about all this stuff. But when you think, okay, first of all, with all the speculation that gold's going to go up is fantastic. But when you look at the economy as a whole, you know, Chairman Powell, one thing I started to say earlier was that he was talking about, hey, now that we've got inflation tamed, which it's not, we have to worry about the layoffs. And every day I could do the layoff channel. I could do the layoff channel and I could talk about how expensive, you know, grocery items are. And it was funny. There was a news item out of the UK, which I shared with the audience. All these people from the UK wrote me, where they were talking about how, you know, they've had inflation of 17, 18% for food, you know, crazy stuff. And then they said, we just have great news. Inflation has finally dropped for 1 week. From August 1st to August 7th, it dropped 0.3%. They're talking about a 7-day period. And I'm like, this is an actual news story. And it's crazy to think about that's what you're gauging things on. Because if you buy anything, if you buy gas, if you pay for anything in the stores, you know how absolutely outrageous everything has been. And this has been a problem, to say the least.
Do you know, I just got an email. It was this week, from my insurance provider, that my homeowner's insurance is going up $1,200 a year.
Wow.
$1,200 a year. So I've
resided a bunch of claims.
No. I've resided in my home for 9 years. Not a single claim. Not one. And my insurance is going up $1,200 a year.
That's actually really reasonable. I have one guy out of no, it is. It's ridiculous.
It's an extra $100 a month.
One guy in Florida wrote me and sent me that his insurance is going up $90,000 to $90,000 for his house. He goes, we're retired. We can't afford this. Yeah. Thank God the house is paid for. We're going to go, he said, raw dog, go straight. So crazy. But
have you seen what they're doing with those towers in Miami and Fort Lauderdale and the assessments because of the retrofitting ever since the seaside, the Surfside
you've always been
collapse?
A good advice and a good caliber for real estate on where to go in Southern California and things like that, and guided me. And I haven't bought anything, so don't think I have. I'm listening to him with areas and things like that. But these condos are a real problem. And these poor people that retired, that live in a fixed income, and they get hit with these $200,000 assessments.
Assessments, HOAs, you have no control. These assessments that they're trying to, have these condo owners pay along the coast of Florida is several $100,000 per unit to retrofit the entire building because of the Surfside collapse a few years ago. And most of the occupants are retirees.
Yeah. And what do? You make your homeowner association payment every month, and they're supposed to maintain the complex. That's what that money's. It's not to line their pockets. Yeah. And we're seeing just problem after problem after problem. And I try to steer people away from condos lately in general, just because, a bad idea travels fast, and you're going to see this happen to other states and other cities and everything else. So.
You know what it's like? It's like season tickets, and then your favorite team builds a new stadium.
Yeah.
And all of a sudden you get the assessments. My sister and brother-in-law had 8 season tickets to the Jets.
Oh, wow.
They were his grandfathers. So they'd had him in the family for, 30 years to the Jets. They built the new stadium. They wanted to charge $30,000 per seat. My brother-in-law begged my sister, please let me just keep 2. She said, you're not keeping any of them. Are you kidding me? You go to half the games, you give away half the tickets, $30,000 per seat. But it's the same thing. And you get hit with these unexpected expenses, and it just absolutely derails your retirement plans.
JP Morgan did a study that they released where they had, millions of people that could not afford a $400, emergency charge right now. And people are living on credit, which is bad. And one thing that we tell people, I know you do the same thing, is even if you're in debt, because I had a subscriber write me and she said, I just want 15 minutes of your time because I just can't get ahead. But her problem was $30,000 in credit card debt every month, that the extra money that she was spending, the $800 in interest payments alone, just to maintain the minimum payments on her credit cards, that's what was killing her. And I'm like, you got to get that down.
One of the most important things right now, because we are in a recession, even though they're trying to say, it's going to be a soft landing. When they're looking at multiple rate cuts, and the size of the first rate cut is completely hinged on a job report that's coming out next week after they've revised the job reports, keep in mind, down by 881,000 jobs. But what you need to do is consolidate that debt. You need to consolidate that debt. You need to get a manageable payment. You need to look at what your overall expenditures are, and you need to work on a budget.
And sell everything that you don't need. I'm telling you that right now. Why people still have money, Facebook Marketplace, Craigslist, whatever, but sell things you don't need. Sell cars you don't need. Sell sporting goods. Sell everything you can of value that you don't need right now.
Or cancel the gym membership you don't use, the streaming services that you don't need.
Right.
And even the cable services now. Do you know, all of a sudden my DirecTV is like $220 a month. The only reason that I even got DirecTV was because it had the NFL package.
Mm-hmm.
Now the NFL package is on YouTube.
Yes.
And it's an additional $340 per month. So I've said to my wife, we're canceling DirecTV. We're going to do YouTube because I have to have my NFL package.
Yeah. Well, you got to, but you want to watch TV, you want local news, things like that too.
Got to watch my Giants.
But again, don't forget, you guys, Patriot Gold Group, #1 rated for 8 years in a row, which I'm very proud of. I'm not just a spokesman, I'm a client of the company. They have the best service. Call them today, 888-330-1431, and get a free investor guide. Talk to them. They will answer all your questions as to why precious metals should be in your future. And again, the sky's the limit with everything. But, let's talk about the election and what you think is going to happen. I mean, I just think that...
I know one thing for certain, and everyone can agree. It's going to be absolutely the most contested election in history. Neither side will really accept the results, right? I mean, that's the truth. Yeah. And it's going to, and that's another reason that you want to be into physical gold and silver, because there's going to be discord. There's going to be absolute, anarchy. It's coming up. It's going to be in November. And let me tell you that, if Trump and Vance win, all of a sudden they're going to just launch on a vigorous, extensive, exhaustive, investigations into everything, like they did with the Mueller report and then the impeachment hearings. So nothing's getting done in government. Nothing's getting done. They're too busy launching all these investigations.
Now, if Kamala wins, you're going to have...
Well, you have quadruple tax on stock buybacks. You get possibly taxed on unrealized gains, cap gains taxes. Of course, she's now committing to this 4 million new housing units and $25,000. Where's that money coming from?
Well, here in California,
where's the money coming from?
$150,000. They just passed it for non-citizens. I mean, I would love $150,000 down payment forgiveness. I mean, it's crazy, absolutely crazy. But this is not good for business. Either way, you're going to have chaos, guys, and you're going to have. I tell people that I have job stability, Dan. I'm telling them to prepare for the fact that you could lose your job. Everybody could lose their job, and you need to get ready for this and save for a rainy day.
One thing that's very, very important for your viewers to know that, okay, let's say you have a Kamala win. Because of the quadruple tax on the stock buybacks, because of the possibility of cap gains tax on unrealized gains, because of her commitment to build 4 million homes, because of her commitment to give $25,000 to each individual buying one of these $4 million homes, because of all these social welfare programs, what's going to happen is they're going to have to print exponentially more money, and gold and silver are just going to skyrocket.
Yes, and you're going to see inflation go through the moon, too.
Now, with the Trump presidency, what you have to understand is gold doubled during Trump's first term. And here's why. Because of Trump's tough tariffs on China and Mexico, which he is committed to tough tariffs on China and Mexico, he is going to cut interest rates. He wants to possibly remove Jerome Powell. He wants to have some say in interest rates, and he is going to lower interest rates. So those two things, and he is going to extend the tax cuts, right? So when you extend tax cuts, you have tariffs, and you cut rates, gold and silver are going to go to the moon. That's why, really, you have to understand this right now. We are in a win-win situation for physical gold and silver.
Absolutely.
Now, one thing I do want to mention, I'm not a certified financial investment advisor, nor do I give tax advice. But yeah, we are in a win-win scenario for physical gold and silver. Gold and silver really is insurance and protection when you really don't trust what's going on in the government.
Mm-hmm.
And you look at the level of discord. I mean, trust the government. Look what just happened.
It's like I want to laugh.
Well, look who's the nominee. I'm curious. You know, there's not a single one of your viewers that can say, well, I voted for Kamala in the primaries. Not one. Not one. That's the one thing I can tell you. Not one viewer said I voted for Kamala in the primaries.
We're going to get Jack on we have a new private channel, I Allegedly Lie, which is, you can sign up for it at iallegedly.tv. We're going to get Jack on there and do a video on that for you guys tomorrow. There's always some things that are just too hot to talk about here. And we're going to.
I apologize.
No. Don't apologize.
These views are the views of Dan's sponsors, not necessarily Dan's views. And I apologize for that.
We get into it, but no. But no. Well, we're gonna. I'll drag you over there. Again,
all I'm trying to do
some
is
things are too hot to talk about here, but
I'm trying to explain how this will impact the economy, the financial markets, physical gold and silver, and your retirement. That's it. That's it.
One thing that we have is that the chaos is on the menu. And with that, it's going to be good for the precious metals market. I believe that. Bob Kudla believes that. Bob Kudla also believes that if the world was euphoric and perfect and everybody was getting along, there's not enough silver to meet the manufacturing needs today. And then you hear about Samsung doing what they did with the battery factory and the new battery. It's going to be something that there's silver's in such huge demand right now. Silver's going to shoot up.
Well, Keith Neumeyer, he's the CEO of First Majestic Silver, said automakers like Tesla should be buying silver mines. And if they're to buy silver mines because of the EV production, that silver will skyrocket to $125 an ounce. That's the CEO of First Majestic Silver, Keith Neumeyer.
Keith Neumeyer's a player.
So and silver right now is at $29 an ounce. So if you have a, say, 3 or 5 year runway, getting silver at $29 an ounce, could be like your Apple purchase in '84.
Yeah, exactly. We talked about, and you brought up the retirees and getting themselves protected. I have so many friends during the last downturn that they were like, oh my God, I just didn't want to open up my statements. It was so bad. And I just thought someday it's going to all come back, but will it? And you need to protect yourself and hedge yourself. And that's why gold and silver has been, money for centuries.
They say we're headed towards a lost decade in the stock market because of what's happened with these outrageous valuations. Outrageous. I mean, the one thing is everyone's talking about NVIDIA, right? Everyone's talking about NVIDIA. I mean, NVIDIA, I remember, was, back in 2018, about $16 a share. $16 a share. Instead of 10-for-1 stock split. So really, NVIDIA now is, I don't know, $1,300 a share.
It is 120 something last time I checked because of the latest 10-for-1.
Yeah, so now it's so now it's about 130. But you have to ask yourself the one thing, and believe me, I read reports all day long. No one can really quantify how NVIDIA or how AI makes any money. How AI is making or generating any revenue. You got to generate revenue. Look at Warren Buffett's portfolio. Look at the consumer staples. Look at, you look at Coca-Cola. You look at, how does these tech stocks, and that's been fueling the stock market, are tech stocks, the Magnificent Seven, the NASDAQ, and stock buybacks.
You brought up Warren Buffett, which is a great thing. We've talked about this. A few weeks ago, we talked about the fact that Warren Buffett, yes, he was selling Apple, but he was unloading Bank of America shares. And this Monday of this week, $982 million he reported, and he sold over $6.5 billion of Bank of America. So what does he know about Bank of America right now that we should be thinking about and worried about? And again, we've talked about banking problems, and we tell people to prepare. You've been talking about this, Dan, for 4 years now.
Commercial real estate crises?
Well, that I know for a fact, because I know I have two friends that I had a birthday celebration last weekend with, and these guys they both do foreclosures, and they do different sectors and different banks, and it is about to get lit up like 4th of July, because you know, we served, posted commercial properties. We posted vacant land. We posted multiple properties owned by investors. These guys, you haven't seen anything yet, but you're seeing apartment buildings that you're paying rent on, and your landlord is going to have those go back to the bank because they cannot afford the insurance, they cannot afford the increased mortgage payments. They got a 5-year loan maybe on the building, and now you're seeing the thing shoot up. So they haven't seen anything yet when it comes to the commercial, but that's going to affect all of us.
Well, the commercial real estate crises, I mean, we're heading towards that in 2025 with these interest-only loans that were refied during COVID. And the occupancy rate on these commercial real estate buildings really is, you know, down to about 65, 70%.
Some are as low as 30, but the thing that these banks, the foreclosure guys told me, is that you've got a huge percentage of people that are not paying the rent. It's like, well, this place is empty. Why should I be paying my rent right now? So you may have a 35, 40% occupancy rate, but you don't have anybody paying right now. So that's a real problem.
And the deli and the dry cleaner and all the businesses that were at one time in the lobby that are no longer there because the building is only at half capacity. So then the half capacity, those renters are saying, why am I paying this premium rent when I used to get those services? I'm no longer getting those services that were down in the lobby. They're sitting in an apocalyptic, empty building that's not being serviced.
Absolutely.
Bathrooms that aren't being cleaned. And they're saying, why am I paying this rent?
No.
Plus, you know, look, it's also a generational thing. I've got to tell you, I mean, this younger generation, I'll be 54 in December, but 30-year-olds think they have this right to just work remote.
Yeah.
It's not even from home. They want to work from, you know, San Juan, Puerto Rico. They want to go and work from, you know, Nashville, Tennessee, and Austin. They want to just travel and work.
I've had 2 people in the last week and a half write me and say, what can I do about my boss wanting me to come in the office? I moved to another state. And I'm like, oh, you're going to lose your job.
Go to work.
Yeah.
How about you go to work?
Oh my God. So,
now's not the time to be, to you know,
be the squeaky wheel.
Yeah,
you know?
at all. Or to consider, you know, now's not the time to start, you know, fighting with your boss about the number of days a week he's asking you to come into the office. Yeah.
I'm telling you, a team is only as good as its weakest player. And I always say that. And we all need to get together. And as a country, we need to come together and spread the love. Okay. So thank you, Jack, for being here.
Thank you,
guys. Don't forget Patriot Gold. Call them today, 888-330-1431, or use the link that I'll put below. But I always love that you're on. And everybody asked about Jack and what's the gold guy think about everything. And we could go on forever, but we will go to the private channel and talk some chaos.
May I mention one thing?
Absolutely.
So we're the only company nationwide where you can work directly with an owner. And we have the 2024 Recession Protection No Fee for Life IRA on qualifying rollovers. So on qualifying rollovers, no fee for life IRA, and work directly with an owner. We're Consumer Affairs top rated now for 8 years in a row, over 2,000 5-star reviews, A+ rated on the Better Business Bureau. Thank you.
Okay. Guys, onward and upward. Email me and email your questions for Jack, hello@iallegedly.com. And we'll see you guys very soon. Thank you, sir, for being here.
Thanks for having me. Thank you.